Good morning, all. Again, I've already said what my name is, and okay, I spoke about what I do. My profession, I'm an accountant, I'm a chartered accountant. I'm a chartered human resource personnel. I'm chartered tax administrator. So I try to ensure that I cover my field anywhere I go, so that when I meet the child, to speak. And well, in the course of my lifetime, I've had to do some of those things. Can't be in an association in a place I'm not associated properly. So we just came in that. Yes, I can. I meet you.
Okay, my name is Matthew Philip Isomo.
For
Laundry and science.
Okay, good. As an accountant. Good. So let's go straight into I'm sure a lot of people have spoken to you about the tax reform. Why is the tax reform? I don't want to speak about that. Why the tax reform? Even why do we have to go this route? And many people have misunderstood the tax reform. They are taking it for introduction of new taxes. Is that our understanding in the room? Maybe it's before now. Because when people hear tax reform, it's as if this government said want to kill us with taxes. But it was because the system was not ideal before. And so when you hear the word reform, something wasn't good before, or the form was not good. We want to make it, shape it, reform it, and that was the essence. And what is that? Nigerians will be relying on oil revenue for a while. Our revenue were neglected, and because of that, it wasn't an area of interest for many people. And so what happens there really doesn't matter. And so what the government do, maybe the president, because it's also a tax man, they have a good understanding of taxation. He has been a consultant and he knows that, oh, the tax system is not so good. So what can we do to make it well? Even when people complain that they pay multiple taxes, how much comes to government as revenue? So there are issues around that. If I ask in the room what's your opinion about taxes, I'm sure about the tax system. Some will say multiplicity of taxes, some will say it's even confusing, we don't understand. Some will say too many people collecting. So there are different, and how can we solve that? Our tax to GDP ratio is also very low, a little over 10%. And it's lower than the African average. And so, President said, okay, can we look at the whole thing? We've been doing some analysis over the years with the review of the national tax policy, with the annual finance act, and all the rest. But to say, no, let's have an holistic reform so that Nigerians can have a good system. And so that was essence. And he said something. He said, in all this, when we are doing this reform, I am more concerned about something. I'm concerned about we taxing prosperity and not poverty. I'm concerned about we taxing the fruits and not the seed. And so in all the reform, whatever we're doing must show that we are not taxing poverty. Whatever we're doing must show that we're not taxing poverty. We are not taxing the seed, but the fruits. That means if someone wants to invest in Nigeria, let him bring that investment in. Don't tax the capital. Let that capital be put into business. Let that business start yielding profit. And let that profit is what you now tax. If the man has no profit, don't tax. That means no tax. That means the economy has not favored that person. So why should there be tax? Let the man be able to break even. Let the business break even. After not just breaking even, make returns before paying taxes. And so that was, and we know that business remains critical in expanding revenue. Why? The ultimate aim is to, in the future, it may not be now, expand Nigeria's revenue. So I'll be talking more. I've been given the topic to speak on navigating the new tax regime, implication for businesses, And after that, we're going to speak about obligation, compliance strategies, and the future of business sustainability. So, this is by way of introduction. I want to ask, this is a picture. So, if you see this picture, okay, let me give you a message. So there is this. Do we have anybody who does business promotion? No? Maybe like marketing, like marketing. Is there any marketer in this room? Okay, you do. So there's this marketer. He has been very successful in Europe, very successful in US. It's an award-winning, and he markets this product. Yes, yes. So the company set up is trying to break into the market in the Middle East. And so they called him up and said, how do we break into this market? You are an award winner in marketing and promotion. Can we send you there? Said, good and fine. When he got into that environment, the first challenge he had was that he could not understand the language, the official language in the Middle East. It's Arabic. And so he looked around and said, well, there are two things that are very universal in communication. And first one is music. The second one is graphics. I can do a graphics since I can't understand the language. Let me do graphics. So let me do graphics. So he did these graphics. Medium of passing message. If I ask in the room, if you were in the Middle East and you saw this graphic, what would be your understanding? Literally, I don't want you to take it too much. I don't want you to analyze it. Just tell me, as this picture is like this, is it sending any message? You said something? Energy booster. It says an energy booster. So can you just tell me how this picture is? An energy booster.
I can see that young man sack of energy.
Okay.
He has taken the coke.
Okay.
And is placing it palm.
It's time well, I'm same understanding.
Yes.
We all have same understanding. Yes, very good. You are correct. And that means we are thinking where our IQs are in that. However, the man was in an unfamiliar environment. You know, all of you got this understanding because we are Nigerians. And we all have an understanding. We think in English. All of us were trained in English and we think in English. However, the Arabic one, the Middle East does not think in English, it thinks in Arabic. And in Arabic, they read from right to left. Yeah. In Nigeria, we read from left to right. So the Englishman taught us to read from right to left and left to right. So in the Middle East now, what does this mean?
If you drink this,
that means the man was energetic. He drank a bottle of Coke and became exhausted. So what has happened to that product? So one of the problems we had with the tax reform and in communicating it was context. So people do take first. I will first say something that when people hear the word tax, they don't look at what is behind it. Whether it's tax increase, tax, new tax, tax rates, they forget the word reform that it's about. In fact, many people who don't know the meaning of it. And again, people that now come to analyze it to you. On what context are they analyzing it? What is their end product? So you see people on TV say, this tax reform said, we don't want it. We don't want it. They now ask it, why don't you want it? We just don't want tax at this time. He said, have you read the law? He said, I've not read it and I don't want to read it. So what do you think that person can say about it? Another one, here we have people who are being knowledgeable. but because they've seen one place in the law that will affect their specific business. It's not looking at the general, say, it may be okay, I'm running a conglomerate, maybe there's one place they tighten the nose to ensure that there's equity, because one of the this thing of taxation principle is equity and fairness. So if Mr. A is paying tax, Mr. B should also pay tax. So if the tax reform now say, oh, we want everyone to, we've reduced the tax rate, but everyone will pay. That means there's equity now. So the person who was not paying before, that will now pay now, will want to kill the law. Also, there are some other things. There are some other some people are not paying at all and nobody sees them. And because there's a new reform, people are even talking about the law. There's a problem to them that no, that means we start paying taxes. So by and large, context, what is our understanding of the reform is very important. So that also helps us to appreciate the work and also help us to be able to have understanding of even our responsibility, and so we don't miss it. Just by way of giving us some context on the law. So I'll go on to what we have come here today. The objective of this first session, okay, is to understand the strategic importance of business to Nigeria's tax base. As business, yes, we are all in business to make profits, we are in business to break even, we are in business to prosper. It also, by and large, if you're doing business, it should impact on your immediate environment and overall the system, the Nigerian system. Also, we are going to identify the responsibility and opportunities for business under the new regime. We're going to recognize incentives and relief available to businesses and align business operation with evolving tax expectation. All of them may not be in this document, we may discuss some of them. And if I will read them, you can raise them, I can explain them, because I can put everything. When I was developing this document, it was becoming big and bigger at the point I had to solve. Because I wanted to put everything in my head there. So let's first start. Strategic importance of business to Nigeria's tax base. We all know what tax is. Tax. Let me sample it. What is tax? Somebody else, the definition. What is tax? Because it's always clear what tax. I need someone to. What is tax? The accountants in the way. Or let's say it doesn't. I
think it's payment made without getting any benefits.
Payment made without getting any benefits. That definition is to annoy you. So don't be bringing out definition. So when I was being taught taxation, they taught us one Latin word. They say tax is not quid pro quo. And I had to learn what quid pro quo is. They say it's not give and take. So if I give you my money, you mean I'm not entitled to a return. Any other definition they ask?
A levy imposed by the
A levy imposed by the government
citizen
on a citizen or resident.
for
infrastructural purposes.
A levy imposed by government for perform social services, infrastructural development, or government business. You can say government business generally if you want to put it together. So if you are writing correction as I have to be explicit. Okay, fine.
So it's a financial charge with the supplier of
Thank you very much. A financial charge imposed. The mandatory financial charge imposed on residents, businessmen, because of doing business. You know, it's possible not to do any business. you are right, I'm not saying you're not right, that's another aspect of it. Any other last one? Who has any full definition? Who has any, sir? It's an obligation imposed by government to citizens.
You see, I think it's a means of wealth distribution.
The means of wealth, we are now going into the what we call it, the features of taxation. Yeah, it's a means of wealth distribution, you are very correct. So, we were taught in book definition, say tax is a compulsory levy. So you have to start with the word compulsory, because it is not at will. If it was at will, nobody will agree to pay. Tax is a compulsory levy imposed by government. So number one, it is compulsory. It cannot be imposed by Agbero, it cannot be imposed by a private company, it cannot be imposed by anyone.
That's the why they are negotiating Lagos.
No, that is not that. That is not that. So it's a compulsory levy and it must be imposed by government. So those things have to be connected. It's a compulsory levy imposed by government. Then government now says it's for to carry out government business. So you can build the government business down into providing infrastructure, providing social services, and also every other thing government does. So if it is not compulsory and it is not imposed by government, it's not that. So let's go to Agbero that you said. Agbero is compulsory, right? But it is not imposed by government. And I used to tell people that when a lot of people called that said that what is government doing about this money? They call them non-state actors and collecting everywhere. They are taxes. So I told them that, okay, give me the definition of tax. And number two, many of us we are members of professional bodies, right? Right? Do we pay subscription? We pay subscription. Do we pay other dues? It can be contributory, it can be for one thing or the other, levies, all those things we do. Sorry, how is it different from the money those I do? Those your professional fees, levies I pay. How is it different from the money?
Because I voluntarily joined that association.
So
That's
it's
why.
not voluntary joint.
But I'm not part of the association.
No.
What should
The Agbero, there are no people don't pay. You pay the Agbero money.
Oh, really?
No, you pay.
The indirectly I pay because my extra public transport is.
No, you don't. Who set the price for your own business? Who say no, your business that you do today?
Okay.
Who set the price?
I do.
You do,
Yes.
right? So you do, and based on what parameters you set the
Quality costs.
on your costs, right?
Yes.
Who determine your costs? You determine it based on the parameters in your business environment. Is it not true? So the Agbero is a member of National Union of Road Transport Workers. Is it not?
Yes.
National Association of Road Employers,
Yes.
whatever.
Something, yeah.
NATO. There's another one. They have different associations. And those guys, you don't hear them say, up union, they
Not
are
national.
up national. Thank you. You live at those, you used to pass it. Okay, you know MC. So one, I have to sit down to analyze this one and to see. Yes, it impacts us as the world because that's the same way pricing impacts, but it's because you don't see it. Now, those men are members of this association, and those money they pay would have been spent out to them in their association. If you stop at one bus stop, you will pay so amount. Now, it's not all of us that want to pay association dues. Even in my office, union collect dues every month. They will tell you it's voluntary, but you can't opt out. It's money we don't want to pay. That's the same way those are doing what it is. They are not taxed, though the mode of collection is what now made it open to all of us. Assuming they go to the union office and pay and do delivery or pay some money every day, you won't see them. And of course, they don't know better. So that's the best way to collect. And that's why it impacts us too. If not, you won't know what happens. So I was talking about tax. So the Nigerian National Tax Policy also defines tax as tax as a compulsory levy imposed by government. It now says that imposed by government, whether it is called a tax or not, but it must not be without a direct that definition you gave, without a direct benefits. So why that distinction? I remember I was on the table while that definition was when we were reviewing the national tax policy in South Africa 2016. Yeah. So why I remember it was even time we did that point out. Why he said provided there's no direct benefit. Why? Because there are some monies you pay to government that you get instant benefit. Are there?
Yeah.
Okay. Like many of us pay sanitation benefits, right? When you see them come to your house and pick your refuse.
Yes.
What government does do is to help coordinate that process. It's not a tax. So it's for sanitation. You see the direct thing they do with it. If not, we would have been left. But many of you live in Lagos, right? And I can see that many of you are about my age grade. So that you should know those they call pole, right? When we're growing up, you see them push truck in front of your house and collect those rubbish. Then one government came and said, no, we don't want these people again. They can still use us because they go drop those refuse in some other. So now government now coordinates the process of refuse collection through PSPs and the rest. So it's just a coordination. So that is not a tax. So now we all know what a tax is, what tax is used to, and let's go to how business help to improve taxes because we know what tax. So now job creation and employment, business help. So let's move from the importance of business. How does it help? Job creation and employment. Business, especially SMEs, employ about 4% of Nigeria's workforce. They reduce unemployment and poverty while increasing disposable income that fuels consumer spending. So where does tax come into this question? Where does tax come into this question? When they reduce unemployment and increase disposable income, that fuels was consumer spending. When people have income, they do two things. It's either they save or they spend. If you save, there's going to be interest. Yeah. And there's going to be tax on that interest.
Sure.
If you spend, there's going to be VAT
That's
for your spending. The taxation is there. And aside that, when you get employment, you definitely will pay income tax. So business help in when they provide job creation and employment, they help in improving the revenue of government too. Contribution to the GDP. SMEs alone contribute about 48% to Nigeria's GDP, showing how businesses form the backbone of national productivity. Also, this strengthens Nigeria's economic resilience and diversify income sources beyond oil. We've been talking about non-oil revenue. And when businesses are thriving, it brings that non-oil revenue. Of course, they're going to pay taxes directly, income tax. And the more tax they pay compared to the growth in the economy, it tells our tax to GDP ratio. Innovation and global competitiveness. Nigerian businesses drive innovation in fintech, agriculture, and manufacturing. The more these sectors grow, the more the system is expanded, the business is expanded, tax base become more diversified and expanded. positions Nigeria as a competitive market, attracting FDIs. When FDI comes, it goes beyond even taxation. We have our foreign reserve being boosted, and this helps the country. Economic diversification. Businesses diversify Nigeria's revenue from oil to agriculture to ICT to manufacturing services, and diversification stabilizes the economy against oil price shocks and creates sustainable growth opportunities. You know, it's not just about I'm having today, the oil boom, having money today, and after a while you're borrowing. It's only business that can sustain, that can provide sustainable revenue. Because the more it's like a wheel, as they're progressing, as they're doing well, people are prospering, so we are. Because if a business grows, some people, they will get to a point and say, it's my brain they are using in this office. I think I can set up my own. As much as the company may not like it, once that person breaks to go and set up his own, talent is being multiplied. The economy is also expanding, is growing, and therefore, of course, leads to more revenue for government. Revenue generation for government, this is direct. When those businesses are running, they will definitely pay taxes, corporate taxes, value-added tax, stamp duties, tax, which expand Nigeria's revenue base and increase government fiscal capacity to infrastructure, education, and healthcare. That is where the ultimate is. That is what they are expected to do. So these are the strategic importance of business to Nigerian tax base. And impacts of the tax reform. What has this changed? Has it changed anything? Under the new regime, the tax net is being widened. So we do tell people that the tax reform is not about revenue. It's about stimulating the economy. When we stimulate the economy, naturally the tax net will be widened. Now you see, I'm sure you will have been told about a lot of incentives and a lot of concession government has made in this tax reform. If it was generally about revenue, government will not be reducing taxes or exempting the people from payment of taxes. But it said, okay, yes, when I told you about friends that say we don't want tax covers, and I said, yes, if you're earning minimum wage, you don't have a business with tax. That is more than 50% of the tax base of this country. Do you know that? Minimum wage alone. There are states today that there's about 70% of their workforce is on minimum wage. You know, there are some states we call the rural states. They are on minimum wage. In fact, when that proposal was dropped, they said, no, this cannot work. If not for political will, this reform would have been there a long time. So government said, no, they are all Nigerians. The fact that your state cannot be sustainable does not mean we should stop it. So that is reducing government. However, the government had to forgo, federal government had to forgo part of its revenue for those states to accept that revenue. Like they have to forgo the VAT. 5% VAT is enough for many of those states' revenue. Now, leakages are being reduced. Another part of the reform is that, some business will have to tighten their belts because some places they get cheap money before through loopholes in the law are being tightened. Because as government is reducing its tax base, it's also how to tighten the concessions in the law, how to work on them. Compliance monitoring now is data-driven. And data-driven is because we want transparency. I need to see what you're doing. We practice voluntary tax compliance in Nigeria, self-assessment is due, but people come and say, oh, this is how much I've made. This is the tax to pay. And that is the end, because how many tax officials do we have? How many businesses can they pursue? And so it's only when there's a trigger that you see tax officials follow a particular person. Say, oh, we want to check your sure that this is actually the problem. So, but with technology, you don't need that. Technology can do that without any stress. And so, and again, we should, we take a lot of decisions just by, we perceive that this man, I can perceive that Ogani is very rich, must be a billionaire, and just is perception. But do I have data? Do I have data? Do I know what his income is before I take mine? So the tax reform says you must drive it down to data. You must have those data before you can do anything. So our audit now will be through profiling, and the profiling will be data profiling, not just how to just looking at the person. Or perception rather. Informality is being systematically addressed. So there's a lot of provision in the law that discourage informality. Now, they said before you pay income tax, your turnover must have exceed 100 million. Now, but you have been doing business in your business name before today. That does not cover you to business. You must be a limited liability company. And the more you become limited liability company, the more exposed you are to regulatory authorities. So that means the system is formalizing. We're formalizing the system. So for you to enjoy that incentive, formalize properly. You cannot also be JT, that's your business name, and you're on social media selling. The day they catch you, you will pay all the taxes. So you have to formalize, you have to register your business properly. And also, it's not just about you. Businesses, established businesses, will also be wary of who they do business with. There's a provision in the law that says that if you do business with someone that has no tax ID, you pay a fine of 5 million naira. Administrative, you don't need to go to court. So that means you too, as an established business, you are paying your taxes. Why would you want to shield someone who wants to work under the radar? So you don't want to protect such person. Okay, if you're going to do business with me, you must submit your tax ID. So that's what it means. Also, withholding tax rule today say if you do not have a tax ID, your withholding tax will be double the amount they will have naturally deducted from your money. So it means people will have to naturally formalize. So all these provisions is ensuring reducing informality. Businesses may not be able to claim their input VAT if they do not have what we call a tax invoice or e-invoicing system. So that means if I need to buy from you and you're going to charge me VAT, you must have been compliant with the law too, because I need to claim my input. So people, though everyone want to do business with a large business. And because that's where the money is. And so if we are not, if we've not formalized, so the law is actually self-regulating. A lot of people, the taxman don't need to chase many before you. There's a provision in the law too that before you can claim an express or a capital allowance, you must have paid VAT on that asset you want to claim. And you show evidence before you claim the capital allowance. So those are provisions. So like I said, the reform's philosophy is tax prosperity and not poverty, tax value creation, not subsistence. And so businesses are therefore not merely taxpayers, they are revenue partner in national development. Let's move on. So responsibility of businesses under the new tax regime. One, must be registered. Say you should register and obtain a tax ID. Also, the bank and all the financial institutions are mandated to request for tax ID. Don't mind, it's tax ID, not TIN now, because it's been changed to what tax ID. Why tax ID? There's the concept of tax ID different from the TIN. The TIN is tax identification number with the tax authority issued. Now we're trying to see how we can harmonize all the TIN in Nigeria into just one single database. And there's a legacy, and we're using legacy instruments like in me, national identity number, for individual, and the corporate CAC certificate, whether your RC number, your VN number, for corporate or businesses. And so that is the basis for the tax ID. So we don't ask everyone to go and register. So what the tax authorities are doing is get the data from the Nigeria Identity Management Commission and the Corporate Affairs Commission. Just create those, so the system is now harmonized and creating. So once you have one, you already have the other. Yes, in referencing with you as for taxation, you'll be seeing tax ID. But of course, if you go to anywhere, once you put your name, we know your tax ID. Once you put your tax ID, you can know your name. Again, it is not open to everyone to have that information. So in case you're thinking about confidentiality or information, it is just within those levels of government. And they won't have more than your number, except especially for tax purposes. The taxman or tax authority can have other information associated to your name, but the NIMC cannot have associated information of your tax affairs. So, because tax information very separate. It's treated with utmost secrecy and confidentiality. Tax digital onboarding with tax authority, deployment of electronic fiscal device and e-invoicing. I'm sure you've all heard about e-invoicing. It's the next big thing in tax administration. Right now, so what is e-invoicing? Before now, under Section 13 of our Value-Added Tax Act, it's compulsory that everyone in business that carries out an economic transaction must issue an invoice, a tax invoice. And you must show, I'm sure we all learned this also in commerce or in business studies. When you do a business transaction, you issue an invoice or a receipt. So it's also very important in taxation that you should issue an invoice for every business you do. And we know a lot of people neglect issuing one. People don't even bother to collect two. But now the law have now been changed, or have been streamlined to ensure that the government have an invoice portal for businesses. And so there is the introduction of the electronic invoice deployed by the Nigerian Revenue Service. So every business must onboard onto the invoice system, and all the invoices you issue must go through that system. And what does that do? We give transparency to your business transaction. And so when it comes to declaration, we don't even need to bother because the information is already with government. So deployment of e-invoicing makes it transparent and linkage with CAC banking and other regulatory databases which have explained this. Now we have filing obligation. Now we have more filing obligation, depending on what class of business you are. Timely filing of annual returns, monthly periodic VAT and withholding tax remittances and returns, payee deductions for employees, transfer pricing filing. We have the country by country reporting. We have the common reporting standard documentation where applicable, and as I said, it's for some class of companies, large companies that probably have that are members of a group of a multinational enterprise. So there are some reporting standard that they need to do. So these are some of the obligations. In fact, there are other more obligations. Now, if you are doing tax planning, you must report it to the tax authority. So I want to do, I've seen that there is this provision in the law that allows me to plan my affairs, to take advantage of this. In order to minimize my tax exposure, we will declare that. And it's allowed that you do that. But because we see that tax planning is going beyond planning now, it's going beyond avoidance, it's now going to evasion, or what we call aggressive tax planning. Some do kitty shopping, some do base erosion and profit shifting. So there are a lot of planning people do. Well, they have money or they are very sophisticated and they move their profit to low tax jurisdiction. Now, remittance duties. Businesses now carry heightened responsibility as withholding agents. So businesses can be appointed as agents for tax collection for government, VAT collection and remittances, withholding deductions, payee compliance, and failure attracts stiff penalties, interest, and in some cases, administrative enforcement measures. The penalty regime has also changed. There are more penalties now. In fact, most penalties now are administrative. Before, you may have to be convicted before you pay those penalties. But now, once it is confirmed that you have failed to fulfill your obligation, you now be penalized. Okay, you wanted to ask?
And the first statement,
No problem.
talk about the tax restriction.
Yes. Okay, what happened? Okay, so there's some. So when you do business in Nigeria, you're expected to pay the Nigerian tax. So people do something in international taxation, like if you say multinational enterprise. Let's use the one I work with them there, Coca-Cola. Coca-Cola can have they can go to a place like Dubai. Dubai now start paying income tax. So okay, let me see Dubai, but their income tax still low. Now they can go to or some of these GCC countries. Those are I think Kuwait, Barbados is among Caribbean. So they go to some areas where the tax is low or don't pay at all, income tax at all. So they can just collect one trade center like this or anyway, and that is their office. Now, everything they do all over the world, they claim that it's from that place. So the expenses is charged to that place. Like now, you can have their HR located in that place. Everybody doing HR is in Nigeria. But they tell you that the recruitment cost is from there. The advice, that everything they're doing is from there. And yeah, not the pay, the expenses is there, the service is there. So when they finish making money, they send a portion, they say, oh, we spent about 1 billion in recruitment. And they send it there as the cost. We can also use things like formula. I was using Coca-Cola. So we can design the formula in Nigeria, say, okay, Coca-Cola, Nigerians like what?
Cheers. Foreign things now.
Foreign things. Okay. Now I'm looking at something that now we do Zobo, right?
Yes.
So Coca-Cola can just somebody can stand up in Nigeria and develop something and say Zobo Coke or something, and they start selling it here. They can say it was designed and the formula came from their headquarters in that place, and they can charge it $1 billion. So what now happens is that when they make profit in Nigeria, they take that amount or whatever is charged to the expense as an expense from that place. and pay that money outside, without tax, you can't tax it because it's an expense. So what does it do? It reduces the money, the income of the Nigerian company. So when it reduces the income, what you have simply done is that you have sent away a portion of tax that belongs to Nigeria. So that place is a low tax jurisdiction. You understand the right? So the essence of it is that people just create. There will be not some people even take hotel rooms, just hotel rooms and register a company in that country, just put it there so they can maintain the permanent suites there as their company. But there's no commercial function, commercial anything there. So once in a while, the MD here can go to that place, can go to what's the name of that building? What can they do? And go and chill for 1 or 2 nights. Come back there. I went to the property. But the essence was because of the business plan. That's what they have. We have to do. So it's an issue all over the world, which is being discussed at the OECD or the United Nations. Here they are discussing issues at the United Nations on taxation. This is what they're discussing.
So there's nothing in the game to tax before country system.
There is. We are forward thinking. Don't worry. We have people in Nigeria who are capable, who also, in fact, deal with those. Many countries have not been able to address this, even across Europe and the rest. It favors some countries because most of those companies, when they make those money, they take it back to their own. So the most of the multinational enterprise from the US, from Europe, are the ones that are being favored. So the Africa where we consume most of these things, they take those money out, we don't get the value for it. So that's one of them. I will still teach you something when we get there. I'll still talk on it. Okay, let's move on. Okay, you're welcome. So remittances, I've spoken about remittances. The record keeping requirement. Business must maintain accurate accounting books. You must maintain accurate books of account. Source documents. I spoke about invoices, receipts. These are source documents. You must also maintain digital transaction records. Now everyone is going digital. We are moving from the era of brick and mortar. Now it's digital. Everything is digital. And you must prove. And the only way you can prove it is you must also maintain digital records. Payroll and contract documentation. You can't say, oh, I spent 5 million for salaries. You must show us evidence. So what happens before now is lack of harmonization within the national federal tax authority and the states, between the NRS and the states. So what companies do? They claim to states. Now we only have 500 staff and file income tax pay for 500 staff. Then they come to the NRS and say, we have 1,500 staff, and they will deduct salaries for 1,500 staff. So they should pay the state and should pay the federal government. And they'll file the move on. And that is because of lack of harmonization. Now, if there was a database that the state and the federal can see at least some basic information, it helps to cover that. And it's something that's been worked on. In fact, we may be having joint tax audits exercises to unravel some of this. The era of informal accounting, is closing. So also we need to, we are asking businesses to now document everything formally. And many people have all their expenses in their head. And their income in their head. Yes, madam, please give me 2,000. So some are dropping. Now you must document it well. I'm sure for many of you who are on social media, you see a lot of people talking like, when you are paying money to bank account now, put.
Gift.
What is the essence of the narration? It's only for you. It's for you. It's for you to be able to follow up how. Because for the tax man, the narration does not matter to me. The only thing you should do is that when you are telling me this is my, because the only reason, no, not that they will go to your bank account, they will ask for your bank statement. So if when they ask for your bank statement, they are interested in all your credits. You are the one that will be interested in all your debits. So you now, I will say, oh, see, I can see your credits. You have a turnover of 100 million. You say, no, yes, that's my turnover, but I have expenses. Okay, can you tell me your expenses? And you start telling me. So if you now see gift, now you are the one. You are the one giving. I mean, in your thought, in your book, if you give, that means you are paying people, or when you receive it, okay, you are receiving. They are giving. Are you charity? Is your name charity? Okay.
Okay. Well, the government discriminates type of accounting you use for your business. So, for example, an accrual-based accounting or cash-based accounting, which one is more preferred for the government?
So there's something about tax. There's time to pay tax. So government don't bother about what accounting. As for tax purposes, yes, so there's something in accounting and taxation. I say taxation does not bother itself with professional standards. Yes, you talk about IFRS, this and GAAP, but you know one thing. In tax, naturally follow the money. So some of us who are accountants and those who are lawyers, you have to take away your professional listing and look for the money. So the tax man will say when you earn the money, tax is due. So if it's in withholding tax, so that's when you are talking about accruals or where it will affect is probably your payment for withholding tax, your payment for VAT. But the law says that you must account for it when you earn it if you want. Because you may have an agreement of non-receiving. Now, for income tax, you know, income tax is on preceding basis. So whether it's accruals or except if you have recorded it in your book, but you have not received it, and you have not received it, you know you have earned it.
Yes, but I won't receive it.
And then you have earned it. So if you have those sales have been made, income have been made, but you have not received it, probably it may be because of an understanding between for your business system. Now, so what we do in tax is for income tax, of course, you pay on preceding year. It's last year account that you'll be paying this year. So whether accruals or this thing will not affect it. Okay, that is done.
Cash.
Yes.
Example.
Yes.
So my receipt is part of my income.
Have you raised invoice? You have raised invoice, right?
Yes, I have this.
Yes.
And this have been concluded.
Yes.
So I'm going to pay that. So when my customer decides not to pay or he goes to bad debt.
So what you say, so.
So,
Is that-
okay,
If that's our income, what says that is, that's our.
yes,
People at the time when just. To see.
you see bad debt.
That's what you say.
Now is the debt is part.
Yes.
Or let's suppose that was calculated in November, December. Right? Who to settle that tax?
By June.
Okay, true. Right?
So no, depending on your accounting there. You earned January to December.
Okay,
January to
yeah,
December.
I was on explanation. January to December.
Okay, January to December. And you mean by June, you are not protected. And you have concluded everything. Well, the system, if we see, so, except it is in provision, the law will not allow provision. But once you raise your receipt, your invoice, that's it.
So the debt's now goes to
But
bad.
I collected them.
No, so if debts go bad, it's also allowed in some instance. The audit man will come and scrutinize that. Because you can't be seen that when you are raising invoice. But as revenue been recognized.
Yes.
Yes.
So they need to
The question you have is just, is the outstanding. The one you receive, obviously, it's not on that.
It's not understanding.
And the last portion of that will be paid immediately.
No, I understand that. I'm talking about it because your income.
Everyone's-
Receivables and what's from-
Yes, yeah.
So that receivables parts, you pay taxes on it already. Because it's
You
part
got
of-
in a provision for, that's one. That's the That's the way you have it it's a global records. Close, so the man pay out of 100 million, pay 80. Let's you put it in the receivable. Of course, whatever tax obligation the 80 would have paid immediately. But the only thing now, you want to match the receivable with the tax. So if you still outstanding, you can still manage because you've not received, because that investment can also be displayed based on different activity. Based on maybe performance and so many things. But most people don't pay let's say probably maybe the VAT or any outstanding on that. The receivable, most people don't usually pay because they don't know what will they receive.
Exactly.
So before,
But the tax man would not calculate it that way.
You can calculate generally, you know the
so
consignment.
you are going to pay your account. So for income tax purposes, once you have to pay your account, you're going to recognize that your account, right? Is still outstanding. Of course, no, it's until we come for audit that you start asking that. Why have you not received this kind of thing? Of course, what you declare at that point is already paid. For VAT and total tax purpose. At that time, you conclude on the payment is what tax is also paid. Before, for VAT, we used to recognize full invoice, you have to pay. But as a finance act, now allow the cash collected, so you pay on.
That's why I was asking my
Sure, that's going on.
question. Is it cash based on?
It's on cash base, of cash base. It used to be a product, then now change cash base. Okay, let's move on. So reform promotes this reform too. I've spoken about this. Now promote efficiency in taxation. You have low cost of compliance for taxpayers. Faster, predictable tax administration. Predict better use of data and technology. So we're trying to reduce human intervention. It should be more of data, technology than human intervention. Now, transparency in taxation, clear tax rules and guidance, predictable interpretation and enforcement, reduce opportunities for rent seeking and corruption. Of course, when you don't see men can avoid that. No, even as a government agencies of tax, I used to tax barrier. Tax reform aim to institutionalize both efficiency and transparency. So that's what one of the things the tax reform aim to do. And so the basic transparency is very key in taxation. So I can't see that very well. 30 minutes, okay. Okay. Don't worry, I'm able to finish before 30 minutes. So responsibilities and opportunities under the new tax regime. They are not restrictive, they are just enabling. One of them is you may have increased transparency. Like I said, there's a lot of returns you need to file now. There's also returns for tax incentive. If you enjoy tax incentive, you submit returns. And if you enjoy this number of tax incentive, you have to file a return. And even individuals will file returns to states. As in businesses rather, which are captured under the individual bill. You know, if you run business there, you do business, you file your returns and pay tax to the states, right? So the states we also collect that report and file and submit the Nigerian Revenue Service for onward transmission to the Minister of Finance, so that he can compute our tax expenditure on yearly basis, so that the government will know how much is actually given away in terms of tax incentive. A real-time reporting expectation. I spoke to you about the e-invoicing that will be receiving most data transaction, commercial transaction on real-time basis. And so it will get to a point where the tax authority at the end of the year sends you a report and say, from our own point of view, where we sit, we can see these are your expenses, these are your income, and they prepare a dummy, something like an account for you, or a statement of financial affairs. So please confirm or update. So when you go to most advanced countries now, I was fortunate to see one in Sweden. That's what they do. They call it refilled return. So they send it to you and say, update, confirm. And you have to, you cannot say, no, there are some transactions that you did not capture. I'm going to come and pay for that one. You have that one. I'm sure businesses can do that. Or you say there are some that is not correct the way you captured it, or you have settled it otherwise. You have to now report. Also, greater audit exposure. Now, as we go, a lot of people, businesses transaction will be seized. So the tax authority will now need to be doing profiling whether this is enough for them to chase or need, but it's going to be exposed. At least we've used for compliance checks. Beneficial ownership disclosure. Also, yes, there's returns that also need to declare who actually own this income. So you don't say I help somebody to keep it. You see a lot of people say, somebody called me recently and said that on our accounts, we have so many turnover that it's actually not our money. Somebody just say, help me keep this money, and we kept. And someone also told me that I follow somebody to use my account for a contract. I said, what name is that business? As far as the tax man is concerned, it's an income in that account. So if you print your statement, you can get this number. We don't know whether, because the company is not you. So a lot of Nigerians always say, my company. The company is not yours, because the company is an entity on its own. And so whatever happens, it's that company. So the new provision of the law now says that where the company is owing or have defaulted, the MD, the board members, and other principal officers can be held responsible.
Limited by shares.
Limited liability company. The new law provides that so that people will not neglect their responsibilities. You can be held responsible, even as an accountant, sir. You can be held responsible. So don't say no concern me. Once a private company.
But what do we case where it's a company limited by guarantee?
No, company limited by guarantee, of course, it's not a business.
Yes, most time are still non-for-profit.
It's still somewhat business for profit.
For profit.
Somewhat, it's more like a hybrid.
So you know,
like a company and an NGO.
but there are also conditions for them not to distribute such product. Is that not?
Yes.
So they are still like an NGO, they are an NGO.
But the profit,
They are used to advance the cost of that decision.
those profits will be enjoyed, but not
No, they can't distribute.
destroyed, but the profits will be enjoyed.
Enjoy.
Yes.
Of course, whoever enjoy it, if it is not that, you will pay tax.
That's
If you are,
enjoyment in quotes.
that's what I say now. So if you buy, how do you know, and you know there are some things that also become your account. Because you run an LTE, you now buy yourself a Lamborghini. But the master
So promoting the cause, sir.
for what?
Promoting the cause.
So there's something in law that say must be only and exclusive. It isn't necessary for, though we remove the word necessity and reasonability. You're taking away from the law because the first draftsman was using too much asked too much discretion to know what is necessary and reasonable.
Yeah.
So there was this case, somebody, a politician, donated 1 billion to PDP and remove it from his business account. Business, and the taxman said, no, you can't do that. He said, you can see profits. I did road, it's also place state. I did it. It's because I donated this money, but it's not allowed to tax. So for LTE, by the time we start seeing bogus amounts and transactions, we conclude that we start doing this. Now, you run an LTE. What is your objectives? There are some things that are your objectives. All your expenses and expenditure must be in line with that. Even LTE, that's limited by companies limited by guarantee. And the NGOs, even they have more scrutiny. Because they need to scrutinize for money laundering and the rest. So we can't be seeing LTE buying houses in Maitama, paying for suits in Burj Khalifa and the rest. How does that? So those have even improved scrutiny. The law even say you must not carry on trade or business.
Yes.
If not, income from there you pay tax. So opportunities: simplifying tax structures, elimination of duplicative tax system, clearer dispute resolution framework, predictable compliance environment, digital tax administration, reduces human interface, and certainty reduce business risk. Compliance sequencing for business, corporates, SMEs, and multinationals. I've spoken about new registration and tax ID harmonization, real-time pays integration for corporate and CIT, and explain how the tax authority at the national and at the subnationals will now cooperate to ensure that PAYE, the CIT, all of them are jiving. So if you file PAYE returns, it must jive with the overhead expense that you're claiming. Withholding tax reform, now, our withholding tax has been structured, has been changed. It was moved from, I think that was last year, 1st of January last year, mostly 2% and 5% plan. Mandatory transfer pricing and tax planning disclosure for multinationals. And also, we have export and free trade zone, export-oriented promotion. You are left with 25% cap to be sold in custom territory, free zone compliance alignment with national tax rules, free zone exemption from effective tax rate. Now we don't have what we call minimum tax again. And that is where the president was going and say, don't tax the seed, tax the fruit. So before, minimum tax is a tax you pay when you make a loss.
Yeah.
So government say, pay us something. At least you enjoy the small road we get. You enjoy the small security when you take it. You enjoy so you to pay something. But now I said don't pay if the system has not favored you. No. So but to address those MNEs and the profit shifting and base erosion I explained, we introduce something called the effective tax rate. So the effective tax rate is that, large companies have to pay 30% income tax. But by and large, many of them may end up paying, in fact, today, major companies in Nigeria pay about 6 to 7% tax rates on their income, many companies. So why is because we have a 30% tax, but we have so many incentives that they're allowed to pay. So by the time they now claim all of them, we do a ratio of their tax to their turnover. You see that the tax rate is now around 6 to 7%. Now, the discussion around the global global tax discussion right now is that companies should pay at least a minimum of 15% tax rates, effective tax rates. Now, why is because they are now targeting multinational enterprises that have sophisticated ways of reducing their taxes. So, or expanding their expenses. So now it's a global standard. It's called Pillar 2. The global tax challenge is talking about profit shifting and base erosion. Now, what it means is that if a company that's a multinational enterprise with a global turnover of 750 million euros, or a large company with a turnover of 50 billion naira, pays taxes, and the tax is not 15% effective tax rate, it should recompute that tax and take away any amount he has paid and let the such company pay the top up amount balance that makes it up to 15% effective tax rate. So this only applies to not just any company in Nigeria, either a multinational enterprise that has a global turnover of 750 million euro or a single entity with a 50 billion turnover.
Sorry, sir. I think maybe the purpose of this issue is because of the huge volume of technical fees.
And so
They see that a lot of these multinational.
so they use those technical fees to erode the profit, and that's
Yes,
right.
that's the basis.
So there are a lot of things aside from technical fees. They even use fictitious expenses. I've used like HR.
Yes.
Expenses is there a lot of expenses that you cannot say. So when you use the rule that we say that's only an exclusive, they will prove that it's only an exclusive in making that profit. But how realistic is that amount? They also use things like interest on loans. They will say they borrow a Nigerian company money. So imagine that a company is in Nigeria and the company in Dubai or UK say we borrow them $1 billion. And so every year we need to get an interest of certain amount. Who sets that amount? So all those ways they use to move out those income that belongs to Nigeria without tax. So and it's not only happening in Nigeria, it's happening all over the world. So the market jurisdiction suffer. So they say, oh, let's create a rule that ensures that market jurisdiction gets some, and that's why that. So now we also have what we call a national single window for trade facilitation and revenue mobilization. So we have a window where if you want to perform import and export, that window you see customs, RIMASA, NPA, all of them in the same portal where you can clear everything when it comes to import and export. And the Nigerian Revenue Service is there, is the one that now owns that platform. So it's part of some of the compliance. So let me speak a bit about value-added tax. I'm sure we've spoken about it. We have value-added tax rate at 7.5%. Now we have what input, we understand input and output mechanism. So the input is tax you pay when you purchase, output is the one you pay, you collect when you sell. So before now, you are only allowed to claim input on goods purchased for resale, or goods that form raw materials for the production of another good. So that's the only VAT you can claim. Now, if your VAT is on assets, you can't claim it. You have to add that VAT to the cost of the asset. So what does it do to the cost of your asset? It increases the cost. It increases the cost of your assets, and once it increases the cost of your asset, what does it do to your business? It increases your cost, the cost of doing business. And what does it do to your pricing? It increases the price. What does increased price do to your business? It makes you less competitive. If it's a competitive business. If it is not for you, it makes it more, less affordable to people. And, but now, also, if you are in a service-based industry, you cannot claim VAT that you incur in the course of carrying out your services. Because of producing your service. You are a professional, or you deal in financial institutions, many of you are service-based. When you sell your service, you provide your service, you charge VAT. All the VAT you pay in the course of developing that service, running your office and the rest, you cannot claim that. But the new tax reform allows you to now claim that. So by and large, it reduces your costs. So I've spoken about the e-invoicing, and now because there's going to be a lot of allowance for claiming input VAT, it will get to a point, especially for service-based industry like you, that you have more input VAT than output VAT. And so what will that amount to? The tax reform, the VAT reform. And so there's a new system that allows you to claim your VAT reform within 30 days.
Processed.
Sir?
And it will be processed.
Yes, within 30 days. And so, yes, I'm sure you are going to doubt it, but the law. So what can stop government? What is the challenge? The challenge used to be that because the VAT is shared every month, of course, you collect the VAT, you take it to FAC and they share it. The governors would have collected the money and gone. They now come for a reform. Where do you want the tax authority to get that reform? So now the law now says the accountant, the Nigerian Revenue Service, having received application for reform, will communicate the aggregate amount to the accountant general. Then the accountant general will deduct the amount before they share the balance. So there will be money on ground at all times to settle that. And the law says before, if you apply for a reform, the tax authority comes to audit you first. The law says for a VAT reform, don't audit, just pay within 30 days. So, yes, it's interesting. We are looking how it's going to happen. Yes, we should not doubt it because the law has tried to be practical to ensure that it can be done. So, small businesses do not have the obligation to now collect VAT or file VAT. So, what it's trying to do is to ensure that businesses that are small don't pay VAT, and they are, especially if they stay within their small corner. But if they decide to play with the big boys, of course, they will have to face some obligation that may be inadvertent because they are moving to another environment.
Sorry,
So, okay.
This law about these small businesses, small companies, issue of definition of this turnover. Under the Finance Act, I don't know,
Finance Act?
they are not supposed to pay, they are not supposed to do audits. This is small businesses. I don't know the provision.
What do you mean by they're not supposed to pay?
That they will have an audited financial statement.
And the law still says
It's still under this.
yes, the law says they can have simplified statements.
Yeah, so
Yeah.
that is not audited.
That's why you don't need the auditor account.
Okay,
Simplified statement. So the law allows for that. But of course, you must have that document.
And they will still have this challenge of account to account transfer. I transfer money from one bank account to another bank. As a company, but it's been taken as turnover.
And so what were you doing to that account? What were you doing with that other company that you're transferring?
No, it's still the same company.
No, what are you doing that you're transferring? The same company.
Yes, I have account in GT, I have account in Access. Okay, I have money in the Access Bank. I don't.
But you want to pay money
Yes,
from one account.
I transfer.
So what?
And they feel
No, you must also be able to explain it. Yeah, so you must be able to explain yourself as well. Why I did that? Okay, it's convenient for me because I want to pay with one check on one account. So documentation. Even in account, we have notes to the accounts. Notes is you explaining what is there So you must be able to provide those logical explanation. Where it's not logical, of course, you know anything can happen. You must be able to prove. Don't worry, I'm rounding up. So penalties now, okay?
Using, I don't think we're using the term small business and small corporate activity.
Oh.
And we're not calling it, they mean to different things, small business is business name, and then small company is limited. But it's between, the clarity as to what exactly actually applies.
So what is the difference between small business and small company? That's what you're asking, right?
Yes, which is accurate to this particular.
Okay, so small business and small company, by definition under the law, is a company or is a business that has, so business is legal, right? It can be any form, whether a limited liability company or whatever, as a business or even business or by business, right? You get that. The company, you must be limited as a company. Now, under the law, we have the same definition for it. Now, it's a business that has not more than 100 million naira or 250 million assets. That is the definition. Correct. Now, when you use the word business and companies are different. Under income tax, for the purpose of companies' income tax, you use the word company. Now, under that same income tax, those businesses that are not limited liability company also pay income tax. They are under the regime to the states, individual taxation, because they are seen as an individual. They call them individual in business. So when we have in the law, we have individual and corporate entities. So, or natural and artificial person. So we see individual in business, individual in employment. So for companies, we have limited liability company, or limited by guarantee, or this not business to NGO, what's that? The one based under ventures. No ventures. No. Company, when you have company,
Okay.
it's either limited liability company,
Yeah,
limited by guarantee,
Yes.
or the one under guarantee, NGO, what they call this? Incorporated trustees, those are the ones we call company. So business can be any other one, can be you as an individual doing business. So that's why it comes here is for VAT purpose, because you don't need to be a limited liability company to collect VAT. So you may be doing your business name and collecting VAT. So that's why you hear the word business under VAT. If you're talking income tax, you may stay strictly with. If I'm talking company's income, corporate income, I stay with company. Then if I move to individual income, business. So those nomenclatures can be changed in some instances. So there's no new penalties for and you'll be blacklisted if you do fictitious claim of tax reform. You know, I said it's simple to claim now, but there are a lot of sanctions. And so incentives, small business exemptions, I've explained this. There's a 5 years incentive for agri business. There's simplified capital allowance on a straight line basis now, just like you're doing straight line depreciation. Losses can be carried forward. Also, economic development tax credits for industries. Maybe when we move in the second lesson, I will teach maybe some of this thing. Maybe I'll move it to the second. Free trade and export processing zones. I think I explained this one. You see, however, incentives are now more compliant conditional. You cannot benefit from reliefs if you are not compliant. I said something about capital allowance. You must have paid the VAT and your import duties if you imported such asset. So there are conditions to you marry one incentive to your compliance before you can claim them. And we have tax incentives, economic development 5%. Now, if you are running a business, educational institution, activities, religious, charitable activities, so far they are not for trade or business, they are income tax exempt. Pension business is also not chargeable to tax. Pension income, then your pension as an individual to no tax, you pay gratuity, no income tax, or any other retirement benefits so far is under the Pension Reform Act. We talk about low income earners and salary, any minimum wage. If you decide to give them wage award, palliative or whatever, is also not chargeable to tax. VAT, we have class of VAT exempt, goods, baby products, local manufacturers, sanitary products, public road transportation service, land and building or interest in land and building. Interest in land and building is your rent, your lease. That's what it is. It's also not, it's exempt from VAT. Then we have zero rated, which is basic food, all medical and pharmaceutical products, educational books from nursery to tertiary, including tuition, then fertilizers and medicines, whether herbal products. So if you patronize Akintunde Ayeni and other Babalawos, so others I've spoken about. So intergroup restructuring, you are exempt from VAT, capital gains, and stamp duties. Deductibility of interest, I explained that it has to be wholly and exclusive. Capital allowance, okay. For shares, also there's exemption of all your shares if you sell and you decide to resell. You start to reinvest, whether any amount, there's no tax. But if you are not reinvest, supply is not more than 150 million, still no tax. Digital and crypto assets, the gains are chargeable, the losses are also allowed. The losses are allowed, so but there's now improved reporting. I think aligning business
crypto thing. Okay, correct.
I think let's take that question the next second. I just want to end, this is the last slide.
Okay.
So business must now embed tax governance at board level. So board members need to now be interested in tax because the sanction will affect them, not only the accountants. Treat tax as a strategic function, integrate finance, legal, operations into compliance planning, move from reactive compliance to proactive tax risk management. Tax is no longer a back office issue. It is a governance issue, and we should all take it very, very serious. And so thank you for this. This is the end of the first session.
So please, just take 5 minutes, bathroom break. We're going to be starting the panel session immediately. 5 minutes, please. Just be back in 5 minutes so that we can get, so you can start